Let's not deal with what we don't know about trading. Let's only deal with what we do know. One of the few things that we do know is this. There's evidence. It's irrefutable. It's clear. It's absolutely factual. It's not subject to interpretation. And again, tired of hearing me say this. But let's ask those questions. Let's ask questions for which there are clear and definite answers and spend less time thinking about mythology. Okay? So look, let me show you something. One of the publications that came out of one of the regulatory agencies, and this is taken exactly from what they said. This is what they said. Seasonal trading in oil and gas. If a broker claims that there are seasonal tendencies in heating oil or unleaded gasoline or any other market, and that you can make a lot of money because people need to heat their homes in the winter or use more gasoline in the summer, be suspicious. Usually by the time you get into the energy market, the market has already factored in any quote-unquote seasonal demands. Do you think that's true? In other words, here's what they're saying. They're saying that if everybody knows something, it ain't going to happen. Do you think that's true? Do we need to buy drinks for everyone here this morning? Is my presentation so bad that you don't have energy? Is my energy low this morning? Do I need to give you better stuff? Okay, then I will. Look, the fact of the matter is, certain things happen and they're predictable. Let me show you something. I'm going to show you some history. Now, maybe you can't see this very clearly. Hopefully you can. It should be in your presentation, in the folder there. We're looking at something in heating oil futures. And this applies, by the way, also to crude oil, gasoline, energy stocks. It's all the same stuff. It's all the same stuff. We go to the computer and we ask a question. Is there anything in the energy markets that has happened consistently over many years? Computer goes to work and it says, yes, there are many things. Here's one of them. And it says, heating oil futures, entry date 13 March, exit date 7 April. All years of trading, in other words, since heating oil futures started trading. What has the computer found for us? And again, I want to preface what I'm about to tell you by saying this has no sex appeal whatsoever. It doesn't use any fancy charts, any special colors, or anything. All it tells you is this, that if you bought heating oil futures, May futures, at the end of the day, March 13th, and got out April 7th and risked 8%, you would have been correct 87% of the time. And your risk would be 8%. Your average profit would be 5.59%. Your average profit in points would be 418 points at $4.20 a point, blah, 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 blah. I respectfully, and this is the entire history back to the start of trading in heating oil futures. So I respectfully ask you a question. Does this not give us all the information we need? Totally objective, not subject to interpretation. 2 people, 10 people, 10,000 people looking at the same information independent of one another all over the world can reach the same conclusion unless they've got brain damage. And if they've been trading a lot with other methods, they probably do have brain damage. So, does it tell me what market to trade? Yes. Does it tell me when to get in? To the exact date and to the exact time of day, end of day. Do I need to be thinking about this during the day? No, I know what I'm going to do. Do I know my average profit, my average loss, my risk ahead of time, my percentage average profit, my percentage average loss? How often has it worked? Here's all the statistics, the entry date, the exit date, the price, the entire history, each year profit or loss, the running total, everything. Everything. So I say to you, I could publish this on the front page of the Wall Street Journal, and guess what? People will still find a way to screw it up. Why? Because the human condition is to always try and find reasons why something's not going to work this time. So, I chose this one simply because it's the same one that I've been looking at for years. There are actually several million of these. Does it tell me? There's only one thing this doesn't tell me. And what would that be? Who said that? Exactly. He said, if it's going to work this time. But even within that context, I know going into it that I'm not going to be right 100% of the time. So you take that for granted when you go into the trade. You know that your risk of loss is going to be 8%. So you know that you're going to be risking 8% of the price of that market on that day. Say, well, that's going to require an $1,800 risk. I say, fine, what's the problem? Well, that's too much risk for me. I say, fine, it's not for you then. And if it's not for you, at $1,800 risk, can you buy a call option and define the risk to the price of the call? Can you trade a stock instead of futures? Those are all possibilities. And that was a great answer. Thank you. So the question is, I've got all these statistics. What's wrong with this? Here's what's wrong with it. Number one, it's easy to determine this. Number two, it has no sex appeal. Number three, it doesn't involve any mythical or mystical concepts. Number four, it's easy. Number five, anybody can do this. That's a problem, because we're not looking for that, are we? No, we're not looking for that. We're looking for complicated stuff. Okay.